afternoon, everybody. How is everybody doing? All very confused by today's news and movement? Weird. Canadian dollar interest rate drops quite substantially, much more than forecast, yet it doesn't move. US dollar has ever so slightly better than anticipated retail figures, which don't even mean anything. And it flies 125 ADR. Go figure. So yeah, Euro US dollar hasn't, but some of the other US dollar pairs. Aussie dollar. I've just got out of Aussie US shorts. I got out of Aussie CAD today as well. But yeah, weird movement at the moment, isn't it? Just bizarre. So yeah, anyway. How is everybody? Morning, Mark. Afternoon, even. Peter, Callum, Jurich, Steve, Fletch, Evil, Roswitha, David, Gregors, Neo, Yusuf, Njorj, Mumo, AZ, Crum, Eri. Hello, how we doing? So overnight news. Afternoon, David. David? No? D. McKenna. I just assumed your name was David then for some reason. Might be David, might be Donna, might be Dean, Deirdre. I don't know. So overnight news, not a lot. Bank of Japan pretending they didn't do an intervention. So usual stuff out of the Bank of Japan. No idea what they're doing. No one has any idea what they're doing. But Hayashi refrains from commenting on any FX intervention and wants stable FX movement that reflects fundamentals, which is exactly what we're doing. We're selling the crap out at the end because their economy is in all sorts of trouble. So they are reflecting fundamentals because we shouldn't be buying the yen because you're going down the pan. But apparently that's not what they think. So that's basically it for overnight news. Japan just moaning again. Other than that, today's news we had this morning the Canadian. This afternoon the Canadian CPI numbers. So as you can see, we were on month, we were at a 0.6, forecasting a 0.5% drop. We actually got a 0.7% drop. So that is a very good improvement month on month in the Canadian inflation figures. The median CPI year on year dropped, which they weren't expecting. The trimmed, is kind of the little bit more important, what others would call core. 2.9, which has ticked up, or rather hasn't moved. So we were expecting a tick down. We didn't get the tick down on that one. So it's kind of a mixed bag, although overall it is good. CPI's come down, which means they can drop those interest rates more on the Canadian dollar. So if you look at the CAD pairs, Canadian rallied basically off of the news. So we had a little bit of a kind of whipsaw up, but no real movement. So the market's not really paying an awful lot of attention to that Canadian news. It should be negative. So we should see the Canadians start to weaken off the back of that because it means they're going to drop interest rates again because inflation's going the right way, but not necessarily this month. So the US dollar, as you can see, is having a nice little rally at the moment off the back of its retail numbers. So they've gone up 0.4. We're expecting a 0.1, no change. We actually got a 0.3 increase on the core retail sales and standard retail sales. We got a 0. We were expecting a negative 0.3. So all good news for the US dollar. Overnight tonight, we need to be aware of these two. So 11:45, we've got the CPI for the New Zealand dollar. Quarterly figure coming out at a 0.5 forecast. So they're looking for it to drop. And the pound is CPI figure tomorrow morning. We're looking for that to drop. I really don't think that's going to happen. It might do, but members of the Bank of England have come out and said they're suspecting that we're going to get an inflation figure holding above 2% for the rest of this year. So that 2% achievement, they're expecting it to bounce ever so slightly and hover about a bit. So we'll see what happens. But yeah, it's a weird movement today, a little bit. So we'll see where we go with the figures. 1 sec, let me just doing something with an order over here. Gone. Okay, it's fine. Yeah. So that's your overnight news. Tomorrow is a very light news day. We've got building permits, which don't do anything. Industrial production, which doesn't do much. We've got Waller speaking. So Waller might comment on the impact of retail sales on potential movement. The other piece of news that we had overnight, which was actually yesterday afternoon, back here, 6:15 last night, US short-term interest rate futures pair earlier gains. Traders trim bets on the July Fed rate cut as Powell speaks. So Powell spoke yesterday. If you remember rightly, yesterday, day before, we said we're definitely doing an interest rate drop in July. Previously, it was September, but the Fed said it was next year. Now, the market, 24 hours later, has gone, we don't think so now. Literally within 24 hours, they decided we're not going to do January, we're going to do July this month. And now they've gone, do you know what? After Powell's just said nothing, we've decided against it. So the market has absolutely no clue what the US is doing at all. It really just does not know, which is great for us because as long as that US dollar keeps doing what it's doing, which is doing absolutely nothing but up, down, up, down, up, down. Yeah, as long as it keeps on doing this. Aussie US just hit 125 ADR. Euro New Zealand has just hit its weekly range. As long as it's continuously doing that, which is what the US dollar is doing at the moment, happy days. Because as long as it does that, we continuously just make money off the US dollar, which is fantastic. So I'd much rather they stay completely clueless as long as possible. Market's going to open in 5 minutes. Afternoon, Yoko, Dev. So ADRs today, as you can see, we got a few hits today. Aussie dollar CAD. So I got out of the Aussie dollar CAD shorts today, just before ADR, basically. So we had this push down today on the Canadian rate. So it retraced right back up again. So I decided to jump ship on it. Because we tapped into these highs basically, which is also that low there, and we bought that back up again. So I got out of that one. So that was an H1 M5 mean reversion entry, first entry, second entry, exit, nice and easy. But that's an ADR hit to the downside. Bias on this one obviously is Canadian dollar short, Aussie dollar potentially long. So the bias is actually long. So this is a good buy on ADR today. Aussie dollar Swiss. That's hit ADR to the downside. Swiss franc, not really interested. Hell of a lot of downside on this. Look, there's so much downside potential for this. We need some Swiss franc strength though, and the Swissy interest rates, inflation figures dropped again, so not sure it's going to happen. Aussie US just got out of that. As I said, today we hit 125 ADR. So I was watching this level as the news came out, and basically we pushed down into that level, that weekly level, and then we pushed through it and pushed back up. So as we've pushed down again, I'm just worried because we're extended 125 ADR today on a pullback up into there, and I don't really want to wait. I just want it in the bank. So I decided to bank it. My target on this was here, top of this propulsion gap. That was my TP, which was basically taking that into account. So I was assuming that they were going to potentially bounce off of this propulsion move. So just took it off. So that's done. So you got potential movement back to the upside on that one. Aussie dollar long, US dollar, not a clue, sideways. So you should be able to trade this one in really any direction at the moment. Except we've just had this little breakout. So US dollar pairs are like this at the moment. We've broken out, so wouldn't be surprised if we just sit and hover around up there for a bit. One sec. Aussie US, and we've got Euro odd. So I've got shorts on this one at the moment. Got one on from the RSI extension. Yes, actually today. Sorry, so I just entered this one today. So first entry taken this morning. Second entry just taken there. That was a manual entry. So the spacing on this is only half an ADR. But the reason I took the manual entry should be fairly clear. We got this support area here that's held. Last week's high. Yeah, we hit that and basically we pushed through it and rejected. So I took a manual short. It was closer than I would normally get in, normally 3/4 of an ADR apart, but really good resistance level here. So I still think euro is a short. Australian dollar is a long at the moment. They're not changing their interest rates. So, but it's spiked through on that US dollar news. So it hasn't managed to get any higher than it did off the last hourly candle. So I'm looking for a pushback down into propulsion. I'm targeting this area at the moment because I think obviously euro is a short. So if we can get a nice 61.8 retracement on that, that'd be a lovely profit. However, if we get into their 125 ADR, and if that happens today, I'll be out. But I'll watch that one. So there's a good short opportunity there. Euro is bearish. And we got pound odd. Pound should be bearish. But it's not. So yeah, I don't know what the hell is going on with this pound at the moment. It is just on steroids. We've had nothing from Bailey still about bearish movement and interest rate drops. I'm really hoping we get this 1.9 tomorrow. I think if we get a 2, we'll probably be slightly bearish as well. But if we get a 1.9, you can kiss that pound goodbye tomorrow because that's overshot inflation target. They won't have a choice but to drop it if that 1.9 comes out tomorrow. So I'm really fingers crossed we get a 1.9. And that should kickstart this pound short. So we've got lower highs going in. This is your lower high. Double bottomed there. So it's a descending wedge, bearish. Everything's bearish about the pound. The fundamentals are bearish. The technicals are bearish. It's extended to the upside, so it's ready for a profit take. Everything is just pointing down. But it's just not able to get any traction for some reason. Really parabolic move there. So since we broke out of that small week-long range, we've gone 270 pips. So it's pretty much 3 ADR. Market's just open. So those are your ADRs. We've got a weekly range hit on the Euro New Zealand as well. So that's the first weekly range hit of the week. So that's Monday. So that's your lower Monday. So that is the average weekly range of the Euro New Zealand already done. Big propulsion gap. Absolutely no reason for the New Zealand dollar to weaken off the back of its sustained interest rates. Don't see any reason why we shouldn't be back down there in the next week. Not sooner. Right, let's look at the US markets. All 3 broken long. This could be tricky today because I've got hedges on the FTSE and the DAX this morning. So I was just watching before I came on to see what the market reaction was. We had a gap down push on all the instruments basically today. Obviously, the US dollar movement has caused all these moves today. Just moving my TP down. That one, that's fine. So yeah, we'll see where we go today. Earnings, we've got more earnings kicking off today. That's not earnings. So we are on the 17th today, aren't we? Johnson. Oh, we just had Johnson pre-market. That's it today. No, we're not on the 16th. It's Tuesday. Confused. Oh, sorry. Yeah, so that weekly range here that I'm lying about, Euro New Zealand. Sorry, I gave you the wrong. So that is Monday. So we've done the weekly range in 48 hours. Push that. So yeah, so earnings today, we've got Bank of America, Morgan Stanley, and United Health pre-market. I didn't see those. Oh, there we go. Morgan Stanley drop. Misses on plunging interest income. Ricardo's up 8.4%. It's good. It's where I shop. Or I don't. The wife does. Morgan Stanley beat estimates Bank of America tops estimates as well. So, okay, so all positive earnings today. Market doesn't really seem to want to do anything with it, though. Not a lot of volume coming in today. We'll come back to that in a minute. Right, so those are your ADRs today. RSIs, you can see there's quite a few RSI extensions. We've got 4-hour RSI extensions as well. Afternoon, Brian. It's Taco Tuesday. It is. Euro New Zealand's just hit ADR as well. I'm on it. Yes, Euro New Zealand dollar dropping. Yeah. This is New Zealand dollar dropping into the interest rate decision. Sorry, the inflation figures that are coming in overnight. So banks just positioning themselves ready ahead of the New Zealand announcement later. Euro odd 150 ADR. Flying up, isn't it? So yeah, they're selling off the New Zealand dollar at the moment. Maybe they know something, maybe they don't. So RSIs today. Euro odd. You've got an RSI extension on the hourly. We hit that today. It's embedded up there at the moment. So first entry and my manual second entry taken there already today on that one. 4-hour, we are also extended above the 80. That's one of the other reasons I got into this fairly tight with my entries because it's a beautiful extension. The 80 extension on the 4-hour, incredibly reliable, as I keep saying. You don't get there very often on the 4-hour, but when you do, it's not often you don't get quite a dramatic unwinding of a week or so. So this push is not quite as hard as we've had previously, but it's really, really extended. Euro is bearish, Aussie is bullish. So, no reason why we shouldn't continue this downtrend. 72 and 24 MA area, perfect place to sell for a new leg down. So all looking good for shorts on the Euro odd. RSI extended on the hourly and the 4-hour. Euro CAD also got a 4-hour RSI extension to the upside, just above the 80 level. Again, I've got 5 shorts on that now. Aggressive drawdown control. I'm on this already. So, yeah, short aggressive drawdown control. Already done some DD control on this, but I've got an aggressive on this morning. So let me just put TPs in place. No reason why we shouldn't get down there, is there? So targeting that propulsion move, which is these highs. So it's the break of those highs. Be watching that area as well at some point when we get there. So these are the highs basically. So we double topped that area, put in a new higher low, and then we broke it. We didn't come back and retest it though. So that area might be a more realistic target, but obviously I'll see what happens when we get there, if we get there. So good looking short on that one. Euro CAD extended and embedded on the hourly. A lot of these extended and embedded at the moment. Euro New Zealand, again, extended on the hourly, 4-hour extension to the upside. Don't trade both. Either trade the Euro odd or the Euro New Zealand, because the Aussie and the New Zealand move together. So if you get into both of them, you are overexposing yourself a little bit. Pound odd. Again, the pound just parabolic at the moment. So pound odd, we are up at 87.4 on the 4-hour, just coming up into 2-month and 1-month highs. So beautiful area of resistance out of that propulsion move there. So we had a big, strong push down, broke that low. There's your M pattern. We came back up, retested it. They added more volume, pushed back up, tested it, added more volume, pushing back up. So beautiful range formed. Yeah, lovely range formation there. So if it gets into that zone, I'm short pound New Zealand at the moment. So as I say, don't trade both. They're pretty much the same pair. They move very much the same. So this one, prime candidate for a short. We're 125 ADR today. If we're going to put in a new lower high, this is it. If we're going to hold this range, that's your entry. If it pushes up above that level, it's extended. It's going to get extended beyond the 90 level. It just doesn't happen. So it's if you zoom out, look at the chart. It doesn't happen. You don't get to 90 on the 4-hour chart. It's got to take something pretty catastrophic to get a relative strength reading of 90 or 10 on the 4-hour. So this is up at levels where, like that, you don't, when you get there, you start at least a flag and range, because you can't sustain any more upward movement. There's nobody left to sell. So yeah, it's just beautiful. So that looks lovely for a short if you wanted to get in that today. But plan the entry. Euro odd, we get in there. Second entry there is 3/4 of an ADR away. So if you take one there and a second one there, you're going to average in there when they sell that propulsion gap again and undo this move. Decent move down potentially if you can hold it. Pound CAD also extended to the upside. I'm in this one short as well. So these pounds are getting really extended. Had to do drawdown control on these. We are basing out at the moment. We are extended and embedded on the 4-hour. Beautiful divergence. Well, it's not quite divergence now, is it? But yeah, I mean, it's due a pullback on this leg. Not sure we'll get down to there, but we'll see what happens. If that CPI number comes out tomorrow morning at 1.9, you can kiss this goodbye and you'll be back down here by lunch. Yeah. So just watch the pounds. Pound CAD and pound New Zealand, which is the other one that I'm in, extended and embedded. That's just almost tapped the 90 look. Again, we just don't get to these levels. It's so rare. 90-10 RSI. I've said this before in here, when we've been looking at RSI and readings and things. You go back and look at your charts. It's very, 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 very rare you get to the 90-10. But if you take those trades only, you'll have 100% strike rate. It just cannot sustain movement of more than that. It has to be something fundamental happening or worldwide event happening to get that much movement, because after the banks have moved that distance, there is no one left to sell. Yeah, you cannot buy from nobody. Yeah, you have to turn tail and run and take profit. And as soon as you take profit, the rest of the institutions see the profit being taken. They see their P&Ls drop. They start to take profit. The sellers then smell blood and they jump on board, and it creates that cascade effect where it comes slamming down super, super fast, which is where the climbing up the stairs and falling down the elevator shaft term comes from. That is a profit take. Yeah. This is where the profit takes happen. Big stuff. So yeah, equivalent to that move. Bang. So, or worst case scenario, something like that. So yeah, beautiful entry. But as I say, I was in it from the hourly time frame. A lot further back. So I'm just adjusting positions. So yeah, go pound New Zealand, also a good one for shorts, and New Zealand dollar yen. If you're interested in yens, I'm not. I have no idea what's going on with the yen at the moment. Yes, the intervention looks like it's working. It's looked like it's working twice before, isn't it? We ended up being back up here. So I've no idea. A lot of people wanting to buy it here, get into that carry trade. May well work, may well not. But at the moment, you can't trust fundamentals. You can't trust technicals. You can't trust levels. You can't trust anything with these yen pairs. They are doing what the hell they like, and interventions are or are not working. So, yeah. Do what you will with it. Even the yen look on the 4-hour. Yeah, you just don't get those extensions, those 90-10s. You almost got one there. Almost. A 1 week push. You did get one there. Bang. 1 week push. Yeah. So when you get the 90-10s, it's a week of opposite movement. Yeah. Because usually it's been pushing for weeks. So if they've been pushing for weeks and they need to unwind that profit, they can't unwind that profit like that. They have to take time to do it. It takes a week or so to get the profit off because of the amount of volume that's in there. So yeah, even the yen pairs, they just don't get there. So these pound pairs that we're seeing at the moment, considering we're about to drop interest rates, yeah, which is bearish, for something to push that hard, that fast, they're enticing longs, obviously, aren't they, at the moment? Going, here go, guys, everybody, look, we're buying it, we're buying it, we're buying it. Boom, off you go. See you later. But yeah, be interested to see what the retail sentiment is on that. When it loads. Long break on the Dow. Nasdaq's completely unwinding. Everybody's short, look. So the entire market, 97%, 96%, 91% short. Yeah. These are the times where you go, yeah, but retail's short, so it will keep going long. It can't keep going long. There is nothing left. So retail on the right side for once. Look, euro pound, interestingly, they are 94% long. Yeah, I'm not convinced by my euro pound. But anyway, that CPI number comes out tomorrow as a 1.9. That's going to be up at 175 ADR. So, no problem with my positioning on the pound at the moment. Just waiting for them to sort their life out, as usual. Right. Afternoon, Virginia. Mumo, still in my Aussie dollar CAD shorts, 8 positions. Still going. 8 positions? From where? Back here? No, that wouldn't be 8. How would it get into 8 positions? I mean, that one, you had to get out of that. The next entry was there. In which case, then you should have no more than 3 on. How have you got 8 positions on that? But even so, if you have got 8 positions on that, I can't see how you have. But if you have, yeah, I don't think you'll have a problem. This Canadian dollar, very weird movement on this CAD at the moment. Can't quite work out why this isn't moving a little bit more on that inflation number, but it's not. Very, very weird lackluster movement from the Canadian today. Deem Canna, when you hit 100 or 125 ADR, do you tend to go in with a trade reversal? As an example, if a candle hits 100 or 125 low, do you go long? Go and watch the bootcamp if you want to learn the ADR strategy. It's all in the bootcamp. But yeah, basically wait for a signal. ADR is not a signal. ADR is not a signal indicator. It's a condition indicator. Yeah, same as RSI. So for a strategy, you need 4 things as a very minimum. Yeah, you need a condition to be met. You need a signal to tell you get in the market. You need a stop loss or a risk plan, and you need a target. Yeah. So with the ADRs you got today, as an example, euro odd, drop down to the 5-minute time frame. Yeah. So the reversal indicator is what I teach with ADR. Yeah. So when we hit 100% ADR, which was there was no signal to go short. So it pushed up, pulled back, pushed up, pulled back, pushed up, pulled back. So depending on how you're getting into the market, if you're using a moving average entry, you'd have got in there, which I did. Yeah. If you're using the reversal alert indicator, the reversal would have been on that candle. So you'd have got in there. That's your signal. So the condition is extended. The signal is sellers in your favor. Your risk is either a stop above the high, or if you're position trading, a second entry at a distance away from the first entry. Your target is, for me, always a propulsion gap. So target for me is this propulsion gap here. You could use that propulsion gap there. Yeah. So ADR is just a condition. It's telling you the market is extended. When it gets to these levels, yeah, what these levels mean is it exceeds that level 42% of the time. It exceeds that level 23% of the time. It exceeds that level 12% of the time, which means it can carry on going as long as it likes. Yeah, doesn't mean there is a 77% chance it's going to pull back. There's a 77% chance it's not going to go further than that, but it could just sit there and do that. But ADR is used predominantly to measure distance. So every instrument has a different measurement. So this is what the whole purpose of ADR is, to replace pips. Everybody in the planet selling you courses and crap is teaching you to trade with pips. Pips are useless. One pip, a 20 pip movement on oil, for example, is the entire day's range. A 20 pip movement on the pound New Zealand dollar is 10% of its range. You can't use a 20 pip target on oil and the pound New Zealand dollar, because one of them is 10% of the movement and one of them is 100% of the movement. So ADR is telling you, on average, how far does this thing move a day? That's it. When it moves beyond its average daily range, the likelihood of it not going further is there, isn't it? It's lower, because obviously this is what it does on average. We're only using averages. Nothing's in stone, obviously. It's just rough. Everything is rough in trading. There's nothing set in stone. Levels never get hit to the pip. Very well, they do, but most of the time they don't get hit to the pip. That weekly low reacted there, reacted there, reacted there, reacted there. This is all the market buying this level. Just doesn't buy it from the same price. Buys it from roughly that area. This is last week's high. It's pushed up and it's reacted off of that last week's high, and now it's reacting again off last week's high. So it'll come down to here at some point, but it might do that, it might do that, it might do that. It might just come screaming straight back down and hit 175 ADR tomorrow morning. Everything's rough. Imagine this night New Zealand dollar CPI drops and tomorrow the pound CPI rises above 2.2. Yep. Could happen. Yeah. I mean, just be, whenever you look at anything, any indicators, there's an example. You can't quite see, it's behind my head. Yeah, there's an example of us almost on the Euro odd getting to 10 before we flew back up again. There's an example of us getting to 85. Yeah, but if at that point, as you just said, the Euro increased their interest rates and the Australians dropped their interest rates, this thing would push way above that 90 level. But that is what it takes to get extensions above 90.10. Either something fundamental shifting at the same time, which is completely unique and doesn't normally happen at the same time, or you need something massive from the banks and institutions in one direction. But they don't do that unless there's something very important about to happen. So, this is why you get these on the ADR indicator. Yeah, we have this level at 225 and it stops at 225. So that 225 level on ADR is 2%. 2% of the year, the market will go beyond that level and beyond that level. Yeah. But it takes something pretty special to move it beyond that level. It's got to be a news event, or it's got to be a worldwide event that, an earthquake or a war or the Swiss franc going, do you know what? We're going to drop by 0.5% just because we can. Yeah, that's what moves it that. This is why we don't go any further than that. We don't do 250, 275, because the percentages go down to less than 1% of the time it gets beyond this level. So if it's got beyond that level, something's wrong. And if something's gone beyond that level, damn sure it's coming back. Yeah. Can't sustain it. Can't sustain it. Can't sustain it. There's no one left. You can't buy from someone that's not there. When you've been buying all day long, everyone that's been selling is run over. They're like, screw you. I'm not selling anymore. It's gone wrong all day. And you just have to go, all right, well, if you're not going to sell it, I'll sell mine. And profit take. Could you talk about potentially using hedging to exit squeezes? No. I don't do that. I don't know how to do that. I'd rather do drawdown control than hedge. Hedging is hideous. I've tried hedging many, many times, and it never works. It works until it doesn't work. Yeah, hedging. So if you pound, let's pick one of my pounds at the moment. Yeah, so right now I'm 4 short on this. Yeah, with 2, 3, 4, roughly 4 lots short. Yeah, if I stick a 4 lot long there, yeah, and this pushes up, great. My drawdown freezes, and that's brilliant. So now when do I take off my long? So should I take it off there, or should I take it off there? So let's say I go 4 lots long here. Okay. So I'm hedged, and I can't now lose any more than I have on. What happens when this does this and comes down into the propulsion gap that I've been anticipating it doing for the last 3 to 4 days? I can't take the profit there because I'm hedged. But if I do take profit on my shorts there, I'm now left with a 4 lot long all the way up there, which is probably 2 or 3 ADR away. So I've now got to take another 4 lot long just to average into that. And now if it comes back down to here, I'm stuffed. And what have I got on? Double the lot size I had before, hemorrhaging money. Doesn't work. The only way you can work hedges is from the inside. And it's incredibly complicated, incredibly difficult, and it just never works. Somebody sent me a strategy. I've talked about this, I think, in here before, called it the Holy Grail. And it's a hedging strategy which works on big round numbers. In fact, I've got a chart. I haven't even... So it works on big round numbers and percentages of big round numbers, fractions of big round numbers, 0.2s. And it looks great on paper until you get into a hedge. Yeah. When you get into a hedge that doesn't come back and give you an exit, what happens is your hedge widens and widens and widens and widens until the point of exit on the shorts is there and the point of exit on the longs is there. And all you see is price do this for weeks and weeks and weeks, and you are stuck. And there's nothing you can do about it. Every time that hedge that you've got locked in there comes down and you go, I tell you what, I'm going to take another short. It pops again. You go, oh, I better take another long. And what happens is your hedge gets a little bit wider every time. Your lot size gets a little bit bigger every time. Your locked in loss gets a little bit bigger every time until the point where you look at it and go, I ain't got a clue how to get out of this. There's courses that will teach you how to do this. There's videos out there that show you everything. They'll always show you a perfect example. And they'll always show you if this happens, do that. Never happens that way. So I don't do it. I've tried it. I've built models and EAs to backtest hedging strategies in the way that they teach you to get in and out of hedges, working from the inside, working hedges from the outside, drawdown control on hedges. Can't make any of it profitable because at some point the market just squeezes to a point where it gets so big you just can't get out of it for 6 months, which means you just don't get paid. It works. It will work eventually. Eventually you'll be able to get out of that hedge. But imagine not getting paid for 6 months because you can't get out of the position you're in. Be very careful with it. It's very, very risky. Good point. Forgot to add running PTEA, both RSI and ADR simultaneously, but with very small risk, since RSI has been kind of slow of late. So yeah, if you're doubling, you will be in 8 positions. If you'll be doubling your entries, won't you? Afternoon, Abdi. What could be the reason my SIHEA takes DAX and FTSE trades, but not New York? Leverage. Doesn't even show the pre-market range. Dates, your times are wrong. Probably your times are wrong. Dow out with a clean break. 5R. Have a word. Thank you very much. Wow. Beautiful. Dow, look at that. 150 ADR. So yeah, Dow Jones, clean break. 3R target, 5R target, job done. Thank you very much. That is an opening range breakout. This is what we used to get over and over and over and over again about 18 months ago. This used to happen all the time. It's so rare this happens now because the market's strangulated by inflation and interest rates. But yeah, beautiful. I'm just watching the S&P because I've got 925 profit there. I've got 315 hedge locked in, and that's at a break even. So I'm just toying with the idea of closing the S&P and just dealing with the hedge. I'm just going to see if the S&P can push above that high, because we're holding a little range here. If it goes short, I'm going to get out. The Nasdaq's broken short. I'm going to get out. So closed out the S&P just at a break even because we've got a Nasdaq hedge. So Nasdaq obvious low at propulsion. So target for exit is there. Upside target is yesterday's high. So basically today I'm looking either for a push into propulsion, which they've bought twice, or I'm looking for a push up into yesterday's high, which we'll find limit orders at. So there's definitely going to be limit orders sitting there because we've got a double bottom out of a propulsion move. So we know there's buyers there. Would assume there's buyers at yesterday's high, but that's the hedge on that. So that's either locked in at $300 loss. This is a good example of the hedging, yeah? So my option now is I'm hedged. So to get out of this hedge, what I have to do now is add more shorts so that if it goes down, I'm starting to get more profit on the short side, which helps to pay for the long side. Or, as I hedge, I wait for the market to push down into an area of support resistance, exit the shorts, and then take another long. So basically you're exiting in profit and you're position trading back out of the other side. That's the theory behind SIH. But the problem with it is if you get out there and the market collapses through there, you're out too soon. So all that's happening is that drawdown is getting bigger and bigger and bigger and bigger. So what you have to do is re-hedge short with the same amount that you've got on long. But what that does is it just locks in a little bit more loss, a little bit more loss, and a little bit more loss. And your loss just incrementally grows. Just doesn't work. And then you're stuck in it. And you have to decide when you're going to get out of that position. So normally you would find another support resistance and you would attempt to get out of your shorts there, add more longs to try and get out of that. But if it just does a little flag and then breaks short again, comes down into here or anywhere, see what I mean? The hedge just widens and widens and widens. So where I'm now hedged here, if I get out there and it pushes up and pushes down, my hedge is now not that, it's that. And then if it pushes down into there and I try and get out of my shorts there and then go long and then it pushes down again, I have to re-hedge short there. So the hedge that started there moved to there. Then the hedge starts and goes that big. Yeah. So my hedge that was there, which was easy to get out of, got bigger and bigger. And if you carry that on for days on end, you could be hedged with a short entry there, a long entry there, and somehow you've got to get out of that thing. which means that every time it pushes up, you have to get multiple trades inside. This is what they call working the hedge from the inside. You've got to get multiple trades on the inside working for you profitably over and over and again. And you use all of the profit from that to reduce the sizes of these hedges down. So you're working the hedge. You could be stuck in this for weeks. Terrible. On paper, it looks sound as a pound, but in active trading, actually impossible to get out of. So that was the right decision on the S&P. Big strong push down there. This Dow Jones is absolutely flying. So I suspect something is happening with the dollar. So yeah, retracement on the dollar, which is pushing the indices up. So yeah, a little bit of a retracement on that dollar move. Couldn't you use the profit from the hedge to reduce exposure on the squeeze? Yeah, that is what you should do. I've tested it all as well. So even reducing. So look at the pound as an example here. Yeah. So if you had a hedge on here, yeah, it pushed up, you got out your longs, you tried to get short again, you couldn't, so you had to go long again. So you got a hedge there, yeah, and it pushes up and push it up. If it does this, where's your profit? Where's your profit to work the short, work your way out of that? This is just getting more and more and more and more and more and more in drawdown, and you have no profit to do drawdown control on it with. It's basically the same theory as position trading. Yeah, look at my drawdown control. I'm doing all this drawdown control because the trade is not going against me. I've got to keep this average close so that when we get an ADR move, I can exit the position, because it's wrong. When you're in a hedge, it's very difficult to take profit, enough profit to actually work the hedge, because this is getting so big and drawdown. The amount of profit you make on these moves, you can hardly take any of the hedge off. And that's where it goes wrong. I've tested the drawdown control on hedge. I've got an EA built for it. I haven't got it in this terminal. I've got an EA built for it. So basically, I've modeled it. I've tested it. I've robustness tested multiple variations of exits. And if you use big exits, like you remove 20% or 30% of the hedge with your profit, it eats all the profit. Yeah. So eventually it gets out of the trade, and it does work. It gets out of the trade. But the problem is it takes ages, absolutely ages to get out. And I'm talking months. So in the P&L, you see the P&L goes like this. Yeah. It looks really good. And then it just hemorrhages cash. A bit like the RSI. I just realized I'm drawing the RSI. But it hemorrhages cash like this. Yeah. And then it goes flat and does something like that. And then all of a sudden it will kick in again. If you look at where you started, where you got to, and what the hedge did, the amount of money that you've made is 2 months, 3 months before you've made that much profit. The drawdown is very low. Open drawdown is very low because you're hedging straight away. But the problem is it doesn't make money for months on end. Yeah, you've got to pay yourself. It doesn't work that way. On paper, it does. Like I say, all these what they show you with these hedging videos and things is they show you, a chart like this, and they go, well, you would have done that, you would have done that, you'd have done that, and then you've done that, and you see as you got back down to here, you'd have got out of it, and you're like, well, but that's 3 months, and I just got out of it. I didn't make any money. No, you got out of the hedge. You didn't lose anything. Well, I could do that sitting on my hands and not taking the trade in the first place. I really couldn't make any of it work. So, but that's just me. Go and test it yourself. Good day. I'm trying to purchase the MRA EA on the MQL website, but it's declining my payment. It's probably because you haven't got any money. I don't know. Is there any other way I can purchase? No. It's all through MQL5. If it's declining your payment, try another payment method. Or contact MQL5 support and say you're trying to make a purchase and it's not working. I don't know. Your country may be blocked. Your card type may be blocked. I don't know. It's not for me. You need to talk to MQL5 about that one. Why are you always DCA with your trade? Why? Because that's what I do. Go and watch the position trading bootcamp on the website. There's a link. Explains what I do. Morning, Harold. Afternoon, even. So out the Nasdaq shorts. So looking for this propulsion gap to hold with some buyers. So we've overshot the previous day's low and yesterday's low. You see the limit orders are starting to kick in now. We've got a little bit of upside resistance or support coming in. So it's long entries going in there. See the problem, yeah? I've just banked $929, pounds on this account. I've got 1,300 in drawdown, yeah? So if this pushes now and then continues its downward leg, no problem. If I have to re-hedge this, what I'm doing is I'm making the initial risk of $300, yeah, which is still there at the moment. I'm making that $300 with every single hedge I take double. So the $300 hedge, when I get down to here, if I have to re-hedge it, it's going to cost me $600. If I get down and I try and get out again and get in and it doesn't work and I need to re-hedge it, my loss becomes $900. So now I've got 3 times the loss to make. And every time I take a trade, the trade is the same amount of profit. So what I've got to do is every time I close a trade out, use as much of that as I can to shut that position out. The trouble is that position up there is in $1,300 pounds at the moment of drawdown. So if I make another 600 on a long or 700 on a long, to get that down, I've got to use most of it basically to get out of the hedge. But if it just does that and that, there is no profit. This is where it fails. On paper, it all works beautifully. I'll try and get the EA that I built to model all of this. I'll dig it out and I'll try and show it in one of the live rooms and just show you the pitfalls of it because it looks really good. When I first did it, the P&L was like that, and I was like, "This is good," because that's what hedging is. This is why the hedge. The hedging system exists. The whole purpose of it is not to make a lot of money. It's to make regular income. Yeah. It's never going to set the world on fire. You're never going to find a hedging EA that makes a fortune because the whole purpose is when it's wrong, it locks in a loss. Now you've got to deal with the loss. The loss is always there. There is no trading strategy on the planet that doesn't have a loss. Position trading, we have drawdown control. It's loss. Yeah. When we get out of a position in profit, part of that position is loss. When you hedge, you're locking in your loss. Yeah. There's no way of getting away from it. You are going to lose because it's a 50-50 shot. It's going up or going down. If you get the wrong direction, you've lost. What you do with the loss and how you manage the loss is where you make your money. Yeah. Which is what I keep saying. It's not about how you get in. It's about how you trade after you've got in and how you manage the position. That's where the money's made. So the hedging P&L goes like this beautifully. And then at some point, it goes like this. And it widens and the losses become bigger. The profits become bigger. The losses become bigger. And it just goes into this, holy crap, I'm really stuck mode. And that's what it is. It's the flag break continuations where you don't know what to do with the hedge because you don't know where to get out. If the market goes, actually, and I'm going to drop for 3 days your hedge is just going to get wider and wider and wider and wider. If it doesn't pull back enough for you to close that hedge completely, you're dead. So the models I've tested, I've managed to get P&Ls which look kind of very flat and have stagnation periods, and then very flat and stagnation periods, and very flat. So I've got P&Ls that look like that, but then they hit this thing where it just goes like that for 6 months. That's the problem. Yeah. So I'll try and dig out the EA. Well, I know where it is. I'll find it. So bear with 1 sec. Hedging every trade could get you stuck, but if you use hedging only on the positions that squeeze, and then regardless if it goes up or down, using the profit from one side to reduce loss. Yeah, but like I say, if you get the exit wrong, yes, you'll make a little bit of profit, and you can use a little bit of profit to reduce that loss. But then if it goes against you, what you're doing is you're adding more loss to your hedge. So your hedge loss is getting wider and wider and wider. Think of your P&L, your open P&L. So your open P&L will initially go like that when you lock your hedge in. Then you'll make a little bit and lock another hedge in. Then you'll make a little bit and lock another hedge in. It's a reverse P&L. Hedging, you will see your open P&L. The difference between hedging and normal trading is the P&L goes the other way until the hedge exits. But you're quite right what you say, AZ. Yes, you could try that, but what do you define as a squeeze? So if you only hedge squeezes, what is a squeeze? 3%, 5%, 10%? Yeah. So you'd have to define what you class as a squeeze. And your squeeze can either be monetary value, percentage, or distance, can't it? So which is the best of those to use? So there's a lot of discretion involved in what you would class as a squeeze and when you would decide to hedge. A little bit like the stock index hedge, EA, yeah? You see me in here doing this all the time. I decided to get out there because that is where I deem there to be support in the propulsion move that they have added to twice, caused by the breakout of the range. Yeah, if that's wrong, you shouldn't have got out where I got out. I don't know if that's right or wrong. We will find out now. Yeah, but that's my discretion. Try building a discretion into an automated system to backtest. You can't do it. So you can always get a set of this is probably the best thing to do out of it. But, you know, again, market changes, doesn't it? So it's very difficult to get the forward bit right because you're going to be involved in it. Just quickly, what are your thoughts on Aussie New Zealand? Aussie has been bullish since beginning of June. Well, the New Zealand dollar, obviously, interest rate has changed again, or not. Oh, sorry, that's not true. The Aussie dollar, New Zealand dollar, the New Zealand dollar interest rate has not changed again, and that's what they decided to do with that information. So, the New Zealand dollar and the Aussie dollar are both bull because they can't drop interest rates because inflation is too high. When it loads. So Aussie, we're sitting at 4.35, New Zealand at 5.5. Inflation is at 3.6, coming down okay. Inflation is at 4, coming down okay. Target is 2%, absolutely nowhere near it. There's no way they're dropping interest rates. But they have both indicated there is a chance that they could rise interest rates if this gets a little bit of a bounce. So they're both bullish. So a bull against a bull is sideways. However, the Australian dollar is the bigger economy, the bigger currency. So when you have a time where there is no advantage, if there is going to be a winner, it tends to be the Aussie. So you can see clearly we've gone into a market structure long here, and we've broken out of this range. But if you go out one step further, Yeah. You can see the range highs there and the range lows there. I would find it very hard to believe that we are going to be able to get there, which is your next resistance level, after being this extended. Look at the daily, above the 80. Yeah, look at when we get above the 80 on the daily. It's that one there. I'm going up. It's going to take a fundamental shift to get this any higher. Yeah, it's stretched. I can keep saying it's not a case of it can always go higher, obviously, but you have to look at what the market has done for the last 4 weeks. Go and look at a weekly chart on this. Go and try and find a weekly chart. This move here was a fundamental shift. We were talking earlier about where the market shifts basically from one kind of extreme to another based on 2 news events happening at the same time. So at this point here, Aussies changed their interest rates and New Zealand announced they were going to change their interest rates. So the bias became a massive short. That is why it moved that far. But typical price action, you will find you'll rarely be able to get 4 or 5 weeks in one direction without a pullback. 4, pullback. Yeah, 3, pullback. 1, 2, 3, 4. Just about got 5. That's not very much movement, is it? But 5-ish, pullback. Yeah. 1, 2, 3, 4. This is week 5. This thing's pulling back. Yeah. It's because there's not going to be anybody left to sell at these levels. Yeah. We are at a level where we've just run over. You draw a line there, look. Yeah. Limit orders are sitting at this level here. Yeah. We have just hit them and run over the sellers. So to get through this level, there's a massive amount of limit order sells sitting there. To get through that level takes an immense amount of buying, which is why your RSIs have all got extended to the upside, because the relative strength has got to be so strong to push through that amount of, say there's 200 billion short there. You need 300 billion long to get through it. There's no more longs left. They've expended all their money getting through that level, which is why you need to pull back, power up for the next leg up. So there's a be a profit take move coming. And this is what a false breakout is. Market is extended, exhausted. It can't get any further. So you physically cannot. If I said right now I want to buy 100 billion Aussie dollar with my New Zealand dollar, the banks would turn around and go, "Ain't got it." Why? We've just done that for 4 weeks. Ain't got it. Let me just convert some of my Aussie back into New Zealand and I'll do the transaction for you. Well, I don't want it. Yeah, I want it up here. It's just the mechanics of banking. It just doesn't work that way. So it's massively, massively exhausted. The danger you have is a flag where it just flags and breaks, which could happen. But, you know, it's shot. You just have to look at history. And I just keep saying, looking left is the only thing you have available to you as a trader. Look at where we are on this indicator, or pick another indicator. Use a stochastic, a CCI, a MAC. Use an indicator, an oscillator that measures market condition, which all of them do. Yeah. Look at what happens when we get above this level or below this level. Yeah. So that long, that short, that short, that long, that short, that long, sort of that long, not quite there, is it? And now, yeah, I've only got 1, 2, 3, 4, 5, 6, 7 trades on this chart. There's 100% strike rate in the last 4 years since COVID. Yeah. And trade 7 is now. I don't know what's going to happen in the future, but all I can go on is statistics. Statistically, there's a 100% chance this is dropping. And it's not because of the RSI indicators reading. It's because the banks and institutions are exhausted. It's not about how high something moves. It's about the speed it gets there. It's eaten all the orders in place. So the guys that were selling here and planning to sell for 3 months are out of money in 2-3 weeks. Yeah. We've used the budget. There's none left. We can't do any more. Sorry. Bang. It has to do that because it can't sustain the move. This is why I love the RSI, because the RSI is not measuring how far something's moved or how long it's taken. It's a combination of speed and distance. So the relative strength between the two is what tells us that there's a high probability of a reaction coming. And that level, the 80-20 on the 4-hour and the hourly, they are the holy grail. Not the holy grail, but they are, the ones that you go back and back test. Yeah, if you want a strategy that's got a high strike rate, that's it. If you don't get in with a stop loss and you position trade it, no, you won't be in more than a week, 2 weeks maybe before it's made its money. Problem with it is you're only going to get like 6 to 10 trades a year. But 100% strike rate on 6 to 10 trades a year is how the money's made, isn't it? Afternoon pot DJ, did you pass the FTMO account? No. Blew it. Why did I blow it? Very obvious. I shorted the pound at exactly the wrong time. Again, backing up what I keep saying in here over and over again. Strategy's got nothing to do with passing evaluation. It's the day you start it and what happens to price after you enter your trade. After I entered my pound shorts, the pound went parabolic for no reason. If I'd have started my evaluation today, shorting the pound, I'm pretty sure I'll pass by Thursday this week. But I didn't. I started last week. So it's failed. Afternoon, Chucks. Also, you don't have to exit the entire hedge. You could exit bits to reduce the drawdown. Yeah, that's what it is. That is what working a hedge is. Easy. I have built a model which probably most mathematicians would look at and go, Jesus Christ, I don't get it. Yeah, it doesn't work. It doesn't work enough to make you money, right? This works better. If you would just use the position trader EA or the market reverse alerts EA, stick it on a 4-hour and a daily chart and tell it when you get above 80 and when you get below 20, just get me in, keep scaling in and get me out at 5% profit, you would make more money. Trust me. Backtest that. Go and backtest that. Must reverse at some point, yeah. You'll hear me say many times in here, if you're new, the climbing up the stairs, falling down the elevator shaft. The reason for me saying that is because the elevator shaft is the profit take move, yeah? And it's an exhaustion move. Yeah, so when you're in a trends are market structure based. Profit takes, there is no structure. It's a panic. Yeah, because the banks and institutions have made their money building a position. When they see their P&L reduce multiple times, they sell. And as they sell, everyone sells. And as everyone sells, the sellers come in who weren't in the long and they get in the short. That's why the move happens so fast. Fire sale, yeah? Bank holiday sale when they open the doors at Henny's, whatever, yeah? It's like massive rush, guards get run over, everybody dies, yeah? Tellies get smashed to pieces because there's only 5 of them, there's 5,000 people want them. That's what that is. That's what that is. This is what this is telling you is about to come. Because there's physically nobody left up here. Christmas is over, yeah? I want to buy a telly. I ain't got any left. Sold them all for Christmas. Hang on a minute. We got 100 out the back. We're selling for half price because they're last year's model. Bang. That's basically what's happening. It's a market like everything else. It's a market. Buyers and sellers. So there you go. Re-hedged on the NASDAQ. So got into the long. The long has failed. I've had to re-hedge it. I am now locked in at more loss than I had before. Because that hasn't worked. So what do I do now? when do I now get out? And which way do I get out of? Should I get out of my longs when it moves up to here and hope that it's going to drop? Or should I exit my shorts now and hope it's going to go up? It just adds so much confusion. So I'm going to leave that locked in because that's paid for it. So, hoping it retraces back to the propulsion area. Yeah. This is why we have propulsion gaps on the chart. Yeah, this is what these are. These are bank orders. Yeah. So when you're a bank, you have to execute $1 billion long. There is not $1 billion short. So you have to execute 100 million long, wait for price to pull back, and then you execute another 100 million long. If price pulls back again, you execute another 100 million long. So basically, you enter your initial trade, which breaks out typically of a range normally, which is what a good propulsion gap should be, a range break. Yeah, and then the banks will add to the position because they are long. And if it pushes down below their entry, they're in loss. They don't go into loss because they can add to their positions. Yeah. So that's what the theory of propulsion gaps is all about. Yeah. Long order, add. Long order, add. Didn't get anywhere. Added again. Didn't get anywhere. Added again. Don't care. Executed my entire order. Do what you like with it. Yeah. Just because it hits a propulsion gap and goes up doesn't mean it's going to go up continuously. Don't forget, banks and institutions are made of multiple desks. You've got commercial desks whose job is just to execute orders. You've got speculative desks whose jobs are to execute orders and make profit. You've got hedging desks whose job is to execute orders because they've got a position in the other direction on a commodity and they just need to balance the books so that when the commodity is eventually sold, the difference in the cost is there. So those are those types of orders. There's pension funds, there's pension funds and investment funds in there as well doing orders. These are the only guys that are in and out, in and out, in and out regularly. The rest of these orders are one-sided. Yeah, the commercial orders will be executed. There's no need to execute the other way because they've been asked to execute a transaction between the pound and the CAD of X amount. That's not getting undone. The hedging order is getting undone at some point, but they're long-term, 3 months, typically expiry. And then you've got your pension funds, which are long-term holds. So this is why the market moves in market structure, because all the banks and institutions' orders going in one direction, there's only a percentage of them ever get undone. And you want to add and execute your order in multiple parts. So we're adding and executing our order as we go up. That's basically where market structure is formed. It's just volume of orders. How many banks have got orders going that way and how many have got them going that way today? And that determines the direction of price today, which is why price is random and will never repeat itself because the banks and institutions never have the same volume of orders on 2 days, which is why backtesting will only ever show you what's happened in the past. You're never going to get the same price action intraday ever again. So it's a good estimate. We know that after it's pushed a distance, could be there, or there, it will come down. But where is impossible to tell. All random. Everything's random. Which again, you know, why I say all these courses and institutions, courses and gurus that try and sell you a strategy, it won't work if it uses a fixed stop loss and fixed take profit because their strategy is based on past price action using fixed measurements. Those fixed measurements will never be the same again. So they can get something that looks good in the past as much as you like. You put that back into the future and it doesn't work, which is why position trading works, because we're not reliant on making money out of getting the entry right. We're reliant on making money out of the market moving up and down. That it always does and always has done and always will do, because as long as there are banks, markets will move up and down. That's how we take advantage of it. So when this profit take happens, we will make money. If we get squeezed too far, we will have to take some losses on the way to making money. But we don't just lose all of our money because we didn't get the entry right. That's what everyone's trying to do. They're trying to get the entry spot on. That entry there for the candlestick pattern traders was brilliant. Look. There. So You got a little push up. You got a wick to the upside, an outside bar, bearish engulfing. Hit the short button, stop above the high. Fantastic. What's your target? 3R. So that's my stop. 1, 2, 3. Loss. Was the entry right? Yes. Was it a profitable trade? No, because it didn't make 3R. Didn't even make 2R. So the only way you make money with that type of entry is trading maybe 1.5R. If your strike rate is not above 70%, you're dead. Every time that price action pattern appears on your chart, you take a trade. The distance that moves and the distance it goes and the time it takes to do all of that will never happen again in that order. How can you simulate anything moving forward? You can't. Not going to happen again. But if you get in there and it doesn't work out, and you get in there and it doesn't work out, and you get in there and it doesn't work out, when it does work out, you win. What the banks do. Morning, Mayor. Afternoon, even. Morning. Must be in America. So NASDAQ stalled out. Can't really do anything with this today. Look at that Dow. Wow. So that was 5R. 157. So we're 10R today. Straight up, we've had one bear candle. Dow Jones on an absolute mission today. If only we could have known that was going to happen, eh? So 175 ADR on the Dow. So, we were talking the other day about how the market is becoming very, very quiet during earnings fortnight. Random. That's not quiet, is it? And it's earnings fortnight. Right. That's all I've got for you today. So there's plenty of opportunities on ADRs out there at the moment. Some really nice extensions and some really nice 4-hour RSIs as well. So yeah, very good opportunities to get into some positions. We've got a lovely support resistance zone coming up on EUR/AUD. Obviously, that is also bearish fundamentally as well. So good looking short opportunity there. Yeah, so lots of opportunities for new entries today, but lots of squeezes going on. So be aware, obviously, overnight we've got 2 CPI releases. I'm on tomorrow morning at 8 o'clock. So we'll have had the pound and the New Zealand CPI. So when tonight, before you go to bed, if you've got any New Zealand dollar or Aussie dollar profit, bank it. Whatever you've got in profit, put it in the bank, take it, because you can't get it back, but you can add it back on again. Same with the pound. Anything you've got in profit, stick it in the bank, because if it goes your way, brilliant. Yes, you wouldn't have made as much money on that position, but the rest of them you will make money on. If it goes against you, you've banked some money and you can add that position on again. So just take whatever you've got green off the table ahead of these two, especially Aussie, New Zealand, pound. You may find a little bit of euro movement off of it, but it's the pound basically much more likely. So if that comes out as a positive, i.e. we go to a 2.1, I really don't know what's going to happen with that pound. We've been pushing for like 4, 5, 6 days on some of these pound pairs now. Straight up, yeah, the market's exhausted. Not quite sure what it's going to be able to do if we get a positive number. The thing that worries me is that they know that there is a positive inflation number coming, and they know that Bailey's going to turn around and say we're not dropping interest rates. But that does not mean we're raising interest rates either, which also doesn't make the pound bullish. So I get the feeling we're getting to exhaustion point, but a 1.9 tomorrow will be beautiful. And if we get it, hold it as long as you can, because there's a good chance we'll get a 150, 200 ADR move down tomorrow if we get it. What are your inputs for your RSI period? Or is that one of your own indicators? RSI, this is just normal RSI. Yeah. So it's all covered in the bootcamp. Everything. But again, there's no right or wrong. This is the 14 RSI on the 4-hour chart. So I use the 14 on the 4. I use the 21 on the hourly. That's an hourly 21. But if you wanted to use an hourly 14, you can do. That's the difference. You know, which is right and which is wrong, I don't know. Yeah, because, you know, if you get in at the 70 level on the 21 RSI, you could equate that to being the 90 level on the 10 RSI. 4-hour. I know a lot of people on the 4-hour. I don't know a lot of people, but I know people on the 4-hour, instead of using the 14, are using the 10. And I've tested this, and it's pretty good. But it's only 4 candles different. Yeah, it's just less than a day. So, you know, the difference between the 14 and the 10 RSI on the 4-hour chart is 16 hours. So, yeah, it's not going to be a lot different. But what you are going to get is you're going to get more signals above the 80 level using the 10. And they are faster. So you've got faster moving market. So you can get into more entries, but you should be targeting slightly faster exits or using some kind of protective trailer on it. But again, there's no right or wrong. So, you know, whenever you change an indicator setting, and this is another reason I love the RSI, there's a period. That's it. With a stochastic, you've got 3 periods. So the combination of different options you have on a stochastic are 3 times 3 times 3. On this, it's 1. Yeah, yes, you can use a median, a close, whatever, but so can you on a stochastic. That's it. This is one of the reasons I use the RSI above all other indicators. All other indicators or oscillators, most of them, apart from probably CCI, have multiple inputs. The more inputs you have, the more curve fitting you will be able to do with it. So CCI is also another good oscillator. It's a lot faster than the RSI. The stochastic is faster than the CCI. The faster it is, the more false signals you're going to achieve. So all that you're going to do is, when I can get rid of the CCI, away. All you're going to do is, if you change over to a different setting, for example, the 10 RSI, you will probably say, right, what was the 80 level on the 14 RSI? I'm now going to use the 90 level on the 10. Yeah. So there's your entries above 90 on the 10 RSI. If we switch that over to a 14, if I could click on it, you'll find that they are the same thing, except we're using the 80 level on the 14, whereas you're using the 90 level on the 10. But you're going to get a lot more signals with the 10 because it's moving faster. More signals, more false signals. So you see what I mean? There's very little difference. Which one you use is entirely up to you. There is no right or wrong. They're just going to give you a different reading. It's an instrument which measures sensitivity of relative strength between 2 currency pairs. Yeah. Just the dial, you're going to get a different reading. Which one is the right one to use? I don't know, because I can't see the future. But pick one, stay with it. 10 is good. I've tested the 10, and I have to say, compared to the 14 at the moment, the 10 is probably giving more entries that work than the 14 is. But I have tested the 14 when I started using the 14 5 years ago. It worked brilliantly on what I tested. So if I did a whole rain of back testing now over the post-COVID period, I might settle on actually the 10's better. But then when do I change it in the future from the 10 to the whatever? Yeah. Every time you're changing it, you're just curve fitting to what the current conditions in the market are. So right now, the 10's working better. Who's to say that from tomorrow for the next 5 years, the 14 isn't the best one to use? I don't know. You got to pick one, which is why, as I say, it's not about the indicator signaling an entry. It's about when you take that trade, if it moves against you, what do you do? If it moves your way, it's a very simple solution, isn't it? If it moves your way, you take the money. If it goes against you, you decide on how you exit that position or how you add to that position. Which indicator you use to get you into it doesn't matter. You've got to pick one. But the 10's good. Go and test the 10. If you've got the position trader EA, do a test with the 10 and the 14. And you'll see the differences. But there's not a massive amount of difference. But you'll get a hell of a lot more trade. New Zealand dollar Swiss ADR. I was going. I seem to have stayed. So this New Zealand dollar getting really sold off ahead of the news tomorrow. Quite sure that line is. That's from another chart. So yeah, big moves on the New Zealand coming in at the moment. Weakness in the New Zealand dollar. Got lines all over the place now. 4 candles. Don't start that. Yeah, I'm not going to start that. If you don't know what we mean, if you're in America, you probably don't know the 4 candles sketch. But the 2 Ronnies, comedians in the UK, did a sketch about a guy that works in a hardware store. And someone walks in and asks for 4 candles. I'll let you Google that one. Right, I'll be back tomorrow at 8 o'clock. So we'll do a full analysis tomorrow of what's going on in the market, dependent on what the market is doing. So 8 o'clock tomorrow morning, midweek analysis. We'll look at what's happened this week so far, have a look at what we've got coming up for the rest of this week. And obviously, we'll be looking at what's happened to CPI for those two. All right, so have a good evening. Anything you need, I'll be in Discord or Telegram. Other than that, I will see you guys tomorrow. Have a good one.